Welcome back. With a number of issues in Nigeria's financial services sector, there's been growing calls for increased capacity development in that sector. But joining me now to talk more about this is the Managing Director, Chief Executive Officer of Fitc, an institution charged with the responsibility for developing human capacity for the financial services sector and other related sectors, Dr. Lucy Newman. And Dr. Newman has over 29 years of industry work and consulting experience. Good morning, and thank you so much for your time, Dr. Newman.
Good morning, Harriet, and thank you for the invitation.
Well, there's been a number of issues in the industry. We're talking about insider trading, frauds, and the rest of it. So given your experience with the financial services sector, in your role as the Managing Director, CEO of Fitc, what's your assessment of capacity development in the financial services sector so far?
Capacity is a composite of so many things. So I would first of all like to look at capacity in terms of how far we have gone over the past few decades. Looking at a time horizon of 30 years and looking also in terms of capacity being sophistication of the sector, product innovation, resilience of the institutions, regulatory frameworks that guide the institutions, markets that the institutions play in and their role in that market competitively, and also in terms of global attention on the system. If I look at it domestically, I would rank the financial services sector and give it an A relative to other sectors. If I look continentally, I will give it a B++. If I look globally, I will give it a B. So if you remember, some time ago, we used to have tellers at the banks. You have an account in one bank, perhaps in Lagos, and you want to draw your money in Abuja, you need to have another bank account in Abuja. But now you don't need that. You can be in one branch, in one bank, and you transact your business globally. So going back 30 years, I think we've done quite a lot. Does that mean that there's nothing to be done anymore? Certainly not. The system has gotten more sophisticated and is now exposed to so many threats, which has to be recognized as an ongoing basis. So therefore, capacity will be seen as a journey and not a destination. The moment we feel that we have arrived, that's when things start happening. For instance, now looking at capacity, given all that I've covered, we still have issues of threat of money laundering and financing of terrorism. We still have cyber risk challenges. We still have issues of credit and bad loans. We have issues in the society about people being dishonest. So KYC issues and customer identity issues are remaining challenges despite innovations. We also have challenges of regulation to make sure that the system is competitive globally and can speak the same language with other jurisdictions all over the world. So that is how we have fared in terms of capacity of our institutions. And because financial services sector is a composite of various industries, we have the finance, the banking institution, we have the insurance, we have the pension, we have the mortgage, we have the peripheral ones as microfinance, BDCs and all. If you look at capacity development, you have to take it in context of each of those industries because they've not all grown at the same rate.
All right, so Dr. Newman, let me just come in here so that we can have a more robust conversation and not, just have it one way. You talked about that Nigeria Financial Services has done quite well in terms of your rating, A for domestic, B globally, and B++ on a continental note. And you've also still listed some of the key challenges. But in your view, what are the areas where financial institutions need further capacity development? Because as a date, we have, them still needing to play a more pivotal role for economic development.
Yes. Big issue is participating and supporting growth at the base of the pyramid. Because we're in Africa, we're in Nigeria, we have a large number of people below the level of poverty. It is important that our financial institutions develop products and services not just at the top of the pyramid or in the middle tier, but that address the needs of the common people on the street. And also we have issues of access to finance ratings as a jurisdiction, it hasn't been as good as we would have wanted despite all interventions. So therefore, financial institutions need to understand the market, do a little more of market analysis, take decisions based on empirical evidence, and develop products that address the needs of the people, which at the end of the day is actually very viable. The only thing is that the setup cost might be high, it might require a lot of legwork, and some of the models we have don't work. In the past 10 years, retail business has really grown in the financial services sector, but we now need to build a micro level, microinsurance, microfinance, banking, and the cooperatives, as also development finance. When we do that, then we see transformations at the base of the pyramid. And sadly also, when we focus too much on profit in the short term, we tend not to see the treasures at the end of the tunnel. And that has also been our issue. Competition has driven us very hard. So as a result of that, we've been more capitalist-oriented than development-oriented. That is why many of the regulators within the financial services sector have, in addition to their role in managing the monetary economics, have also had to intervene development-wise by creating various funds to address specific sectors.
So talk to us a little bit about the role of FITC, because you've mentioned the regulators. So talk to us a little bit more about the role of FITC in all of this.
Okay. FITC is actually a child of necessity. There was a study in the late 70s that looked at the financial system, and as at that time, the findings were that many of the institutions within the financial services sector in the mid to late 70s were largely foreign financial institutions, and Nigerians were not playing very active roles in those financial institutions. Most of them were playing front-end roles, which are currently outsourced in the sector. And there was a need to make sure that Nigerians start to participate in technical areas of the financial services and even lead those institutions. So when the committee sat, that was the Pius Okibo Committee, instituted by the federal government. When the committee sat, funny enough, the committee sat for 3 months and they came out with 2 recommendations. One recommendation was that our tertiary institutions needed to start offering courses that will feed the financial services sector, that is courses, actuarial sciences, insurance, banking and finance and co. Then the second recommendation was what led to the creation of FITC, that there was a need for a management development institution that would teach